Welcome to the Retire with Confidence podcast, the podcast that provides you with actionable information for your retirement planning journey. Join us as we dive into topics such as financial planning, taxes, investments, Social Security, Medicare, personal health and wellness, and more. Get ready to take charge of your retirement future with expert advice and insights.
Welcome back to the Retire with Confidence podcast. This episode is brought to you by CWOs for Hire, which is the retirement planning firm that I co-own. We will again be opening up to new clients once we get past these tax deadline, which is a little bit crazy time for us, doing a lot of tax planning, a lot of client meetings. But in a couple of weeks, we'll be opening up to new clients again. So if you'd like to get on our calendar to talk about how we can help and if we are a good fit for you, we would be happy to do so. Lately, we have been hearing a lot of people looking to pay off their mortgage, which by itself is not a bad thing, right? Let's get out of debt. Let's get this paid off so that way we don't have this monthly payment anymore. But I want to emphasize not to always be in a hurry to get the mortgage paid off. And one of the things I find especially fascinating is younger people. So let's use an example of somebody who is 30 years old. They just bought their house. They used a mortgage to buy the house. And now they're looking at, okay, how do I plan my finances? And so often they are hearing, get the mortgage paid off. And so now they've got in their mind, I got to get this thing paid off. How do I hurry up and do that and accelerate the payments? Which doesn't make a whole lot of sense to me. Why did you just go buy a house with debt only to then stress about having to pay off the debt as quickly as possible? Again, getting it paid off is not necessarily a bad thing, but it can be if it's in the absence of other items. Saving enough for retirement, for example. Saving up an emergency fund, another great example. So I want to highlight that getting the mortgage paid off can be okay, but it should fall down fairly low on the list of priorities in terms of financial planning, regardless of age. I just used that example of somebody who was young and had just purchased a house and is now stressing about getting it paid off, despite the fact they just got a 30-year mortgage, or even if it was 15, like, why are you stressing on paying this off? Because it just shouldn't be that high of a priority, especially right off the bat. We want to make sure that you're saving in your retirement account and getting a match if your company offers that. You really want to have an emergency savings fund. You probably want to have a fund built up also for cars that you need, kids you're going to have. If you're going to help pay for college savings, there's a lot of other pieces to focus on before focusing heavily on paying off the house. And I've known plenty of people who have maybe say, 12, 15, 18 years into the mortgage, they've gotten it paid off. That's fine, totally fine. But those people generally had all the other pieces in place. They had taken care of their retirement savings. Their cash flow was in great shape. So their income relative to their expenses was in good shape. So they've done all the other pieces of planning, and then they were able to pay off the mortgage. That can be fine as long as you've taken care of the other pieces. But there's not a need to just rush out and get this thing paid right off the bat, especially if you were someone who was fortunate enough to have the house more than a couple of years ago to where your mortgage rate is like 3 or maybe 4%. Nowadays, it's a little higher. So, historically, it's not all that high still, but it's higher than it has been. If you're somebody locked in at 3 to 4%, heck, go save the money. The bank's paying you 5% on a money market, or you can put it in some longer term stock investments and get that compounded growth over time. Don't go crazy trying to pay off the mortgage just for the sake of paying off the mortgage. One thing that people forget with this is that when you pay off the mortgage, that entire amount that you're paying does not go away. Because what's rolled into that monthly payment is real estate taxes and the insurance on the house. Now, some people have separated this, that you don't see that too often, but some people have separated it. Most of the time, that real estate tax and insurance payment are rolled into the monthly payment that you're making. So even if you got the mortgage paid off, you still need to be saving for that annual real estate tax payment and that either annual or usually semi-annual home insurance payment to make sure that the home is still covered under a good insurance policy. So just keep that in mind. Even if you pay off the mortgage, that entire payment doesn't go away. You still have taxes and insurance to cover on your own on a regular basis. So let's pivot a little bit to retirement planning, because we see this a lot of times in retirement as well, where perhaps people have done a good job paying the mortgage down over time. They still have some left and they'd like to get rid of it. Is this a good idea, bad idea? As usual, it depends. But for example, let's say we're working with somebody that has $1 million of retirement assets and they have, 30,000 left on their mortgage and they just want to get it paid off. Okay, fine. I got no problem with that. They just don't want to deal with the debt anymore. Relative to all of their assets, it's not a huge chunk to pay off. Go ahead, get it paid off, get it done. If it helps with you mentally, taking one thing off your list, especially for retiring with confidence and lowering some stress, go for it. No problem at all. Now, if you are somebody that has $1 million of retirement assets and your mortgage is $400,000, that's a different story. We're not necessarily going to be in a hurry to pay that off over time, especially if drawing money out winds up causing you taxes because you're, say, taking it out of a traditional IRA. If you have to take that money out, pay taxes on it, and then pay off a mortgage, not only have you caused yourself a big tax burden by taking the money out, but now you've lost the ability for that money to compound over time and grow as the markets grow over time. Obviously, markets go up and down, you're going to have fluctuations, but over time, we're counting on a little bit of that market growth to compound and give us those long-term investments and that long-term income. So you lose that if you pull out a big chunk of money just to pay down the mortgage that might be at 3 or 4%. Doesn't make a whole lot of sense to pay off a big mortgage balance by drawing out retirement assets, especially if it's coming out of a traditional IRA. Let it stay there, let it grow tax deferred over time, continue to pay down the mortgage over time, and maybe when it gets to a smaller amount, then you can get that paid off. And ideally, then your assets have also grown over time to an even larger balance that makes it easier to pay off. So the moral of the story is I have no problem paying off debt, but that cannot be the highest priority. We definitely want to do that if it's going to help reduce some stress for you and if the balance relative to your assets is low enough. We just don't want to try to pay off some huge mortgage balance just for the sake of paying it off. Give yourself some time. You can get it paid off over time. You don't have to stress over it too much. You can also pay part of the balance down if that helps just mentally. If you have 400,000 of a balance and you want to get it down to 350, 300 maybe, something like that, fine. That's great. No problem at all. But let's not stress about trying to get all of it paid off if it's causing us to lose focus on the other items, especially on investment growth and building up an emergency savings. So that's the moral of the story today. If you got a small balance you want to pay off, knock it out. If you got a bigger balance, be patient, especially if you have these historically low interest rates that we've had for a long time. No need to stress about paying it off. Focus on the other items so that way long term, you can retire with confidence.